Hey, it's Ed here. Today we're taking a look at technical analysis for Tesla with Elliott Wave Theory. We're going to be starting here on the macro view, as things have shifted a bit since the last video that I created publicly. Of course, we've been discussing about this on Discord as well. But again, first starting in the macro picture and then diving into the smaller timeframes to see if there is some local opportunities to be had and some trades. So let's start here with the counts that we had gone through previously. In this one, again, we had the possibility of having this as a forward move into a wave 1, wave 2, and then wave 3. Again, we're currently looking at a logarithmic scale. Arithmetic scale is not going to be offering us any wave structures here, so that's why we're using it. Again, this structure or this count was provided or created before we had this drop here. And I have not deleted it yet, but I don't think this is very good count anymore. Why? Is because again, we are still retraced 50% of that third wave, or we are still above that 50% retracement. However, again, if we are thinking that this was a wave 4, generally these wave 4s or higher degrees should not come back below these. So again, this was created during these times before this larger decline. So we still had the possibility of reverting already in here, or just doing something like this and then going up. But instead, we just went straight down, and now it would be something else. So I would not really prefer that based on this structure. What else did we have previously as a possibility? Was this very much more of a bullish count, in which we would have this as a 1, 2, 3. Oh, sorry, 1, 2, 1, 2. Again, arithmetic scale, this is so much larger, but again, we have to be considering how this looks on a log scale. In here, we are looking at some kind, let's try that again, some kind of a 55% retracement. And again, this idea was when we were coming down somewhere around here as well. Time-wise, we have already used the minimum amount of time. We have not hit the 618 yet, but again, we don't need to. We have hit the 38.2, which is again the minimum. On log scale, of course, that is the minimum, but on arithmetic scale, we have retraced way more. We're something like 75% to the lows. So again, that brings me to think that maybe this is not a lower degree wave 1. Because again, generally, if a higher degree retracement is happening, or a higher percentage retracement is happening, that generally is a higher degree wave count as well. As we had a 55% retracement here and a 75% retracement here, I can't be, or I have to be thinking about the possibility of this being something larger than this one. So what is the conclusion there? Well, this one. In this scenario, we would have completed 5 waves in here. Sure, we don't really have a very good looking structure here. We need to be probably going to the monthly to see that divergence from the third of third to the 5th in here, and then we would have divergence from the third to the third of 5th, and then again another divergence here at the end. So that still makes sense. That is still a very valid count. However, at this point, we would probably expect way longer of a market structure to be formed here, which would be taking way longer in time. Now we have surely taken out the or taken down the price 75%, which is very much already, but we have not reached any kind of time expectations for this. Does it need to? No, it does not. So again, we're still fine on that. Now, how would this be fitted into the current price action? Let's take a look at that closer. So let's go to, let's say, 4-hour time frame here. We had a couple of different ideas for the structures coming down. A lot of labels in here, but let me try to explain that to you. So in here, we would have some kind of 3-way structure into W, 3 ways into X, and then 3 ways into wave Y, creating a first wave W. On this one, again, we would be expecting 3 ways up, and as this wave X did not retrace 90% of this move here, we would be considering this to be a wave X instead of that wave B of a flat. So W, X, and then wave Y would be coming down. Now, as the WXY is expected to be a 3-way structure, and the wave Y is also a three-way structure in its own, we have the possibility here of thinking at this as a, let's get rid of these, as a potential phi wave coming down. Now here on log scale it is already pretty large. On arithmetic scale it's still comparative to this first structure over here. So again, we could be still thinking that this is a wave A of that wave Y. So overall we would be looking for downwards. However, there is of course another way of labeling this structure over here, which is where we're going to be looking into the next scenario. In this one again, we would be expecting the wave B to be going higher. We're going to be looking into this in just a moment, but overall we would be expecting something like this before a structure coming down again, creating a partner leg for this one and continuation towards these lower numbers here. So that's one of the scenarios. The next one is this. I know the wave B here is very small, but that is something that we can see here on RSI. We have taken out the previous highs, we shifted the RSI cycle downwards and created a new lows here, and that fits very well into the idea of this being a wave C. Sure, we did not really extend much for the wave C, comparing this wave A to that C. We only hit this 618 here, but on macro time or macro targets we hit the 1-to-1 here for the WXY. So again, that is one of the scenarios that could mean that this is the only bullish option in reality. If we want to be really bullish to go back to the all-time highs, this is the count to be watching. Not really sure if this fits into the higher time frame ideas too much, but again, those are just secondary thoughts, and I don't really care about the higher time frame, as the Elliott wave structures are here, giving us local structures that we can be playing, and we don't need to be worrying too much about the higher time frame until something or the smaller time frame structures are actually ending. So what is the most important thing now is the local structures. So let's take a look at those. Again, what are the local structures? To me, currently here on Tesla, it is from these lows of January 2023. For this one, I think this is a pretty decent far-away structure. Previously, I was expecting one more high here, but that did not come, and we just went down again. Why I was expecting that was based on these previous wave 4s. But again, with this pump up higher, we took out the previous consolidation. Depending on the previous higher time frame count, this was either the B wave or a wave 4 or something. So on both scenarios, this is bullish, a bullish sign. After this potential 5-wave move, we would have this as labeled in 3 waves. Sure, this wave Y here is very extended in comparison. Generally, we don't want them to be going beyond the 1.618. Here we go below it and then continue upwards. Now, if you want to be super bull, this is the only way to look at this at the moment, where this would be a 1, 2, 3, 4, 5. I don't like this because, again, the third wave is really not that large. However, it is still possible. This somewhat looks like a far-away structure, however, the extensions are not there. Wave 4 here does not get back to in the wave 1 territory, so there is a chance that we have already created a wave 1, 2, 1, 2. Now, what goes against that idea is this structure over here and how we pivoted from the previous highs. If we are going a bit smaller time frames on 15-minute time frame, I think this looks pretty decent as a far-away move. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Previous wave 4 consolidation on the same place, taking lows, and then we'd be looking for higher prices to counter this structure. In my opinion, this was what I was expecting, a 3-way move. We have not gone back to these areas here. Is it still possible that we are going to go up higher? Sure, it is possible. But there is of course a chance that this was another 1, 2 here, and we would be just doing this instead. I did not take a position here because we did not hit, again, the 50%. And this kind of looks more like a 5-wave than a 3-wave. For 3-way structures, I wanted to hit the 618 here, which did not happen. So again, for that reason, I think this has the potential of being a far-away structure instead. So that's why I was expecting this kind of move here. As long as we don't take out this low here, we are still having this local structure potential doing something like this. And then we would be expecting that drop down. So that is again the trade that I would be expecting to take, or I would be looking to trade. Whenever we take out the local highs here, we'd be looking for this structure to be ending, and we would be going short against these highs. And then of course the first target would be taking out the liquidity that we have here. We have basically a double bottom from here to here. So there is definitely a liquidity, some liquidity down here around $163. Of course, if we want to be targeting a bit longer or smaller prices, we'd be looking for here at the 0.5 and the golden pocket. Golden pocket has some support here. So again, this would be an area of interest for sure. If we are again looking at the extensions here, we'd be looking at these kind of things. 1.236 is fitting right around the golden pocket here at this point. Let's color them properly. And again, the 1-to-1 is kind of close to the 0.5, but not too much. 1-to-1 is not really having any kind of support area here. So on the structures. So again, I would not really care too much about it. But first I would be targeting the liquidity at the 0.5 and then potentially the golden pocket. So you can see that there is pretty decent risk to reward ratios here. But again, as we zoom out the higher degree time frame, this is the main trend at the moment. This is what I believe in. And of course, at this point, wherever we're going to be seeing some kind of bullish signals here, we'd be looking for long setups. Potentially not against this low, but potentially against a 1-2 here. Again, because we are expecting this to be a faraway structure, a start of something new, either wave 1 or wave A. We could be looking for this setup here, where we are either looking for this kind of setup where we are looking for that wave 1-2 and then going long against the current lows, or of course on the macro time frame we'd be looking at something like this, where we'd be expecting targets of that 1-to-1 here. But again, that risk to reward ratio might not be the best unless we come back to the golden pocket here. So maybe trying to target this trade here is the better one. But of course, we're going to be updating that on CTC Discord when the trade setups are there. And if you're interested in joining that, check out the links below. But I think that is pretty much the expectation at the moment. These are the things that I would be looking for locally, and we'll see how those play out. If not, then it's all fine. There's always more trades to come. This could be just doing this and we miss this short opportunity here, but then we would be looking for this for longs. But that is going to be it for this video. Again, I would appreciate the likes and comments on this video if you enjoyed and managed to get this far into the video. If you want to support me and educate yourself, check out the Patreon, check out Udemy course and CTC. All the links on the description box below. Thanks for watching and see you on the next video. Bye bye. Couple of advertisements here: Patreon Elliott Wave Basics course, weekly live streams and more Elliott Wave analysis. Udemy Elliott Wave Advanced course, including RSI, risk management, Elliott Wave strategies and time analysis, and counter trend capital, trade setups, education and community. Check us out if you're interested in learning more.